Sell, sell, sell. Sell all the Alibaba shares you have. Look, my body have already evolved to the point that I start illuminating. Anyway, there's been a lot of concerns about what's happening to Alibaba. So I'll just do a very quick video about explaining what's currently happening and maybe just some of my understanding on an opinion. So don't take anything as financial advice. So now I'll just be taking you guys through on what exactly is happening. So the US stock market has not opened yet. So right now at 9988, it's currently trading around $114 Hong Kong dollar per share. And it's down 5% or 4.9% for short. So what exactly happened was, I think last week on Friday, there was actually a form that was filed for Alibaba Group Holdings, which is the form F6. So in the form F6, interestingly enough, they actually said that, hey, Alibaba actually announced that they want to register 1 billion shares of ADS, which is the American Depository Share, with a proposed maximum aggregate price per unit of $5. So intuitively, many people thought that, hey, Alibaba wanted to issue more shares and to dilute all its shareholder. And there were definitely a lot of commotions on the forums, even in my Discord chat as well. So over the weekend, I think there was an article that was published by Paulo, actually trying to depict and trying to describe what exactly is happening with this $1 billion share registration. So simply put, the 1 billion share registration isn't dilution. So an F6EF form has been filed on Alibaba. The form is for an additional 1 billion ADR. I saw some concerns this could represent dilution, hence this article clearing it up. But long story short, he was going through explaining what are ADR shares, what happens, and how do you satisfy some of the Hong Kong and US regulations. So in conclusion, the F6 filing does not represent dilution. Also, there doesn't seem to be any indication that the additional ADRs that might be created will in any way represent additional Alibaba selling. Instead, we are likely just seeing an administrative requirement being fulfilled with likely no market impact. However, if the administrative motive is not the real motive, then this need to register more ADRs would likely be more bullish in as much as it could represent ongoing excess demand for ADR. So of course, the bullish argument is, hey, why is there a need to suddenly register so many ADR shares? Could it mean that maybe in the US exchange, suddenly there's a lot of demand and they want to keep up with the demand? I did post a very short community post on my community tab in YouTube. And in short, if you just want to summarize it in one sentence, it's not dilution, it's just registering to increase the max amount of ADRs that can be created. And lo and behold, today we find out that there are speculations and rumors saying that Softbank, which is currently the biggest shareholder of Alibaba Group, I think they hold more than 20% of the entire company. It seems like it might signal to us as shareholders that Softbank has the plans to sell. And this speculation is not by anyone else, it's by Citibank. And why is Citibank important? Because essentially, Citibank is the one that is specified in this charter to help issue and to help register the ADR shares. So let's see what Citibank has to say. So Alibaba Group Holdings registered 1 million ADRs that hasn't been registered before, suggesting that Softbank Group may intend to sell some of its shares. So Japan's Softbank backed Alibaba before its IPO, so a large portion of its holdings in the company is not registered as American Depository Shares. So Softbank actually owned 5.39 billion ordinary shares of Alibaba, which is the Hong Kong equivalent. And because it's an 8-to-1 stake, it's equivalent to around 670 million ADS, or around 24.8% stake, so according to their own calculations. So why is this number important? Because right now, 670 million, if we were to look back to the registrations particularly, they are looking to register around 1 billion ADR shares. And that is in excess of the entire holding of SoftBank. So definitely it's a very easy conclusion to draw to, saying that, hey, SoftBank might actually have the intention to liquidate the entire position in Alibaba in the American markets particularly. So on top of that, the article added on their own commentary, saying that SoftBank has been under pressure in recent months as the value of many of their portfolio companies has slid with the tech crackdown and the tech downturn. So SoftBank shares have tumbled about 50% from its peak last year with the decline in the value of holdings, including Didi, 197coms, and DoorDash. So the funny thing is, of course, for those of you who do not know, SoftBank can be seen as a huge fund management kind of thing. Most of the strategy includes spraying and praying. Essentially, they go out, they act as a venture capital, they spray into many tons of startups and then hope that one of them become unicorns. And Alibaba happened to be that unicorn that they backed pre-IPO. And Alibaba is essentially a success story for SoftBank. So the funny thing is, a lot of people are saying that, hey, SoftBank is a capital allocator, like Tencent, of course. And so liquidating some of their positions to realize their profits over the years is perfectly normal. However, a lot of discussions and worry now surrounds Alibaba because this current registration of ADS would represent more than 100% of what Softbank actually own. So it might actually hint to the rest of the investment community that they wish to liquidate their entire position. And honestly, if you look at all the tech giants, liquidating everything means that you are essentially losing confidence and you might feel that the fundamentals have changed. So the funny thing though, if you have to track back Alibaba's performance all the way back in October 2020, that's where they peaked at around 300 Hong Kong dollar. And that was also when Ant was going IPO and everything was going well for this particular Chinese company. And if really they didn't want to stay invested in Alibaba anymore, they could have exited or realized some of their profits. But if I'm not wrong, Softbank actually did realize their profits from time to time over the entire course of this crackdown. Right now, this speculation of Softbank essentially liquidating everything. So personally, I think that the probability is quite low for them to liquidate at such a depressed pricing, unless that they really think that Chairman Xi is of another level and all the Chinese investment that they've invested in thus far are really uninvestable anymore and fundamentals have changed and whatnot. So in this case, it's really a huge valuation haircut if they were to liquidate a huge bulk or even the entire position right now. So I personally think that it wouldn't happen, but of course, this registration of American depository share for Alibaba is extremely and highly suspicious. So some of you might ask, since they already hold the Hong Kong share, why not liquidate the entire position in the Hong Kong exchange? So I'd just like to draw the distinction that, hey, even though we like to think that, hey, Alibaba is listed on both exchange, in the Hong Kong and the US exchange, everything is fungible, and then selling on the Hong Kong exchange or selling on the US exchange should make no difference. Do take note that liquidity in the US market is still the best. They have the most liquid, the most matured market out there. So in order for them to have a quick turnover and in order for them to, if in the event that they really want to liquidate their entire position, it would definitely be beneficial for them to liquidate in the more liquid market rather than throwing it out in the Hong Kong market. And then if there's no specific demand, it's very hard to chase it up. And then there's a very huge price arbitrage and it might even cause the share price to tank unnecessarily or tank to a greater extent if you're to sell it in a more liquid market. So currently right now, everything are speculations and are rumors. And it's said by Citibank. And because it's the analysts from Citibank and because they're facilitating this entire transaction, it makes their words a lot more credible. But unless you hear it from Alibaba Group themselves or you hear it from Softbank themselves, I think everything can be taken with a pinch of salt. So to summarize, the bullish side of the argument says that, hey, maybe there's an increase in demand. That's why there is a requirement for this registration in terms of administrative purposes. The bearish side is there's a huge whale that intends to liquidate the entire position into the market itself, which is why they need to bump up this entire limit. And of course, especially in a volatile market, and especially so if it involves a Chinese company, don't ever commit to the fact that something is impossible. I think in the last 2 years or so, there are a lot of things that were once deemed impossible managed to come into fruition. So I think it's really up to you to decide on how you want to read this news. Just to emphasize the point again, everything is speculations and rumor at this juncture. So throughout the video, you just have to take away one sentence. It's not dilution, it's just registering to increase the max amount of ADRs to be created. So with that, I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye.